G'day traders, Sam here from TradeToProspa. Today's the 20th of October 2022, and what I'll be doing is talking about the Tesla structure and what's likely to happen. It's a bit of a hard one. One of my mates talked about Tesla shares going up and so on. It's a good time to buy. So I'm just having a look at it, and while I thought, while I'm doing that, there's something to be discussed on the forum, let people know how to look at certain things with a certain way. So we have the Wyckoff cycle, and when you look at this cycle, you can easily count the Elliott wave count. One, two, three. Hold on, let's do it again. One, two, three, four, five, and then you have your wide 2, 3, 4, 5 all the way down. However, within each structure, continuous structure, accumulation structure, distribution structure. So we have our accumulation structure, we have our continuation structure, and is this likely to be a distribution structure? Yes, I do think that's the case. Knowing that if we look at the stock market and all the rest, I am bearish, and we're going to go really bearish next year. I think this is a distribution structure in the form of that, or one of many fours schematics for distribution. Now, how can you trade this? Well, let's look up close and align it with this structure. You can see from my perspective, we have 1, 2. This is a strong move, and then even this one's even a stronger move, and this potentially could be wave 5. So if we look at wave 5, I'm just going to look from an alley perspective. You can say that, okay, 1, 2, you can say that 3, 4, 5. So we can already count that we did 5 in a smaller count of a bigger count. Now, the issue I have with this is trying to align it with this schematic. Let's just bring this up here. It's not going to be easy. Okay, let's do that. If we stay still. All right. So if this is Y3 and this is Y4, it makes sense. And this is Y5, and definitely bearish divergence taking place. You can say that this trend line in some way has been broken, reattempt, and then come down. You can also say this is an ascending wedge in some way, right? If this is a ascending wedge, its target is somewhere around there. Okay, give us a sec. That's the target, and it's already done. Even down here, where it started from, this topping formation. The topping formation, this is the neckline. So that neckline's been broken, and it's acted as resistance. This is a classical neckline, perfect in a way, because that was a blind climax, automatic response, and then we had the upthrust, secondary test. Now we have two models that are really irrelevant to this. Let me see if I can get the other one. Is that the one? No. Give me a sec. Not sure why it doesn't come up. Let me just put on pause. Now looking at this other schematic, you can see the difference between these two. These are the two most popular ones. Secondary test and the upthrust, and it just wivels away, so it doesn't make a new high. And that's usually an ascending wedge of some sort. So you can see that trend line. You can say that's it's sort of like an ascending wedge of some sort. So what we have here on this chart, That is our 200 weekly moving average. So if we drop below that, definitely it's going to be a changing trend. We have our 21 monthly moving average, and it's lost it. Very similar to the SP 500 actually. But this is, I think, the target is for the 200 weekly moving average. So this is likely the way thing is. This is it's fine. It's going to have a double bottom, but we might just find this middle layer as a resistance, and then come back down, touch the 200, get another bounce, and then or drop below it really. So this is probably this model taking place, and see this LPSY, that's going to take place here on the 200 moving average. I think that's this is the neckline. That's the neckline. Automatic response. So if it comes down, I'll be bearish. If it comes down to this, in to for this to be uh, going above this level, this line here, for new up thrust, potentially into the fib extensions there. So let's have a look at those fib extensions. Just simplicity, really. And that's our macro wave 5. So we've got our Fibonacci. We got our 1.272, 1.414, and 1.618. So this is going to be a strong resistance, and this could be pretty much based on this. We can say that could potentially be UTAD. And then we come down. So that is all I can see that's potentially happening. How are we going to know? It's going to be hard. If the stock market and all the rest are going to go down, and demand's going to drop, economy is going to slow down based on inflation, it's not looking good for the likes of Tesla as well. It's a luxury item at the moment, and so if we can get this potential wave 5. So if we get an ascending, so we've got what we have here. Let's just do this. We can potentially have this as well. Yeah. So if we find support in this area, as the first, we can, if we're to go bullish, we can probably see that, whatever the case may be, that we will see that kind of motion, and then I'll be shorting it, and that'll be a distribution thing. But I don't think this is going to happen. I think this model is already taking place, this one here. So I think, yeah, so this is the neckline. We need to break this neckline to even have a chance like that. So trading this, I'll be looking to short, tell the truth, if you can. But I'm looking for about a double bottom here, and maybe we can have. So let's do this. Let's just hide all this for a sec, and I'll hide that as well. If this was to continue down, let's get these ones out the way. We can, of some sort, look at a descending wedge, align it with this. See how this section here, we might just break up, maybe double top, or down here. So we've got to keep an eye on this. But yeah, so what's that? 200 to 300. Okay, that's a good range. But I'll be looking for accumulation here, another buy, just like here, and get that going. But you got to see what happens with the RSI. Let's look at the RSI. So yep, the RSI is double bottom. So if we see a bit of a pattern, bullish divergence, something like this, where we see moving to the upside, then I'll go for it. I want to see that kind of setup. Then it's worth going and probably add more if it breaks above that, and then we can be bullish a bit more. But realistically, I'm looking at it not much. It's more sideways. That is definitely the top. That's the bottom, and we can find ourselves here coming down, area of selling, demand of selling. So accumulation, find liquidity, dump it, and down. And then if there's a whatever happens with the stock market and the US dollar, that might be the case, and then back down again. But yeah, this seems to be wave 5. There is that possibility that wave 5 is here as well. But I am looking at this distribution structure. So I'm going to leave it at that, guys. If you want to know how I feel about the SP 500 and the rest of the stock market, look at my other video posts. But definitely, I am being bearish, and for reasons explained. So please give me a like and share. Let's see how this structure works out. I think it's going to be the case where we are at the top, and question is what kind of schematics is going to take place, distribution. This could be already, just looking at this left shoulder, head, right shoulder, could be taking place as well. So this level is very important. We lose that level, we've done. Yep, good time to short. Strong move. That's level wave 3 for sure. Another wave 5, A, B, C type of thing. Might get another little bounce and then back down. So I'm looking at that, looking at these areas, and I think it's pretty much aligned. All right, talk to you soon. Cheers.